Good afternoon, everyone. We're just going to get started in about 2 minutes. So relax and we'll be right with you. Thank you. Okay, we're going to go ahead and get started here. Good to see everyone back again for another workshop. For those of you who might know me or not know me, my name is Michael Ibrahim, Program Manager with the Cultural Investment Portfolio here at the Mass Cultural Council. Our focus is on grants and services for nonprofit cultural organizations. And with that in mind, we're super excited to present cash flow planning. I don't know if anybody has ever said that, but I'm here to say we are excited about cash flow planning, as I hope you are. This workshop is part of our Recover, Rebuild, and Renewal efforts to help organizations come back from COVID-19. This spring, you may have come to a couple of our workshops where we've been offering 2 every week in the areas of financial management, legal issues, human resources, advocacy, board governance, and management. And we're about halfway through our financial management work with the Nonprofit Finance Fund. And speaking of, joining us today to present our session today is Marisa Kubasek from the Nonprofit Finance Fund. We're going to get started in just a moment, but just a few ground rules as we get going for the session today. As you may have seen, Sarah just indicated, please feel free to say hi in the chat with your name and your organization name if you want to give us a little virtual wave. This session does have some automatic captioning. So automatic generated captioning are provided on all Mass Cultural Council meetings and webinars. If you do need any additional accommodations to ensure your participation, just let us know when you register and we'd be happy to do that for you. If this is distracting, you can also click hide subtitles in the closed captioning options at the bottom of Zoom. We will have lots of time for questions and answers throughout the presentation today. Don't wait to the very end. Feel free to keep asking questions throughout the presentation today. We ask that you please use the Q&A function. It just helps us keep organized, and we'll reserve the chat for special links or resources that Sarah's going to put through. So just ask your questions in the Q&A and we'll answer them as we go along. So don't wait. This session is being recorded, as you can probably tell. We put all of these on our YouTube channel the next day, so then you can share it around to maybe that bookkeeper or your treasurer or someone else that really would find value from today's session. You will get an email from me when it is available, but it'll go up tomorrow. As I mentioned, my colleague Sarah Glidden is here, and she's going to be putting some resources into the chat as we go along, so you can follow along, including today's presentation. This session will run for 1 hour, and that includes the time for questions and answers. And with that, I'd love to turn it over to Marisa.
Thank you so much, Michael. And I will be the second person to say I'm also really excited to share more about cash flow planning with you. My name is Marisa, as Michael mentioned. I'm a senior associate with the Nonprofit Finance Fund. And I just want to thank you so much for taking time to join us today. Before we dive in, I want to recognize that we're all coming from a lot of different other Zoom meetings. Maybe we've been sitting for quite some time, or maybe we're rushing back and forth between other obligations. So we're just going to take a quick, maybe 30, 45-second moment to move. You can get up, you can stretch if you cannot move too. But what I'm going to do is I'm going to guide you through stretching your fingers really quickly. They've been typing a lot for you. They've been doing a lot of writing for you and helping you out. So we're going to do that now. And you can shake, you can do a dance. We'll just give it a few more moments. You can also sit perfectly still. And this is just so we can transition into what we're about to talk about without having to worry so much about what was before or what was after. And give it a few more moments. I'll maybe do a head tilt and stretch. Maybe some of you are far more adept at movement than I am. And we'll move on into another piece that we like to really establish to set the groundwork for the work that we're doing. We'd like to, again, acknowledge the Indigenous territories that we're all arriving from. And we invite you to, share in the chat what Indigenous territory you're joining us from. And we do this in NFF because, we want to both acknowledge where we're from geographically, but also where we're situated historically. In our work right now to creating a more vibrant and more just society, we think it's really important to honor, to acknowledge, to name, to level up, what has happened before and what has come before, and we're thinking that in our anti-racist work and our equity work, it's always important to acknowledge, the systemic issues that we've inherited in the context within which that we operate. And so my name is Marisa, like I said, and I'm personally joining you from Los Angeles, which is the land of the Tongva people. And you can see what land that you are situated on by using this link here, this native lands resource. So you can look up, your city and where you're coming from. And it's just always nice to know and to drop into the chat here. And with that, I also want to, return to some meeting agreements that we have. We're going to be delving into talking about cash flow planning, which is a really specific tool. And sometimes, I know this especially as someone who is a former volunteer director in my life before NFF, you can think, well, I don't know if I can do this or if my experience is valid. And I'm here to tell you that absolutely your experience is valid, and we're here to learn from each other. And please definitely, as Michael mentioned before, drop your questions into the chat. Ask those questions that you might have as we go along in the content. And of course, also take care of your needs first. If you need to get water, if you need another movement break, please absolutely take care of those needs first. We understand that, it can get, you can be a little tired sitting here all day. So please absolutely take care of those needs. And just as a review for many of you who are returning, you know that Nonprofit Finance Fund, we are ourselves a nonprofit. We've been around for about 40 years, and we provide tailored investments or CDFI providing loans to organizations. But with that, we also provide strategic advice and accessible insights. We want to help nonprofit leaders like you better understand your own financial situation and financial management. And we do all of this work rooted in our core values, specifically equity in action. And as I mentioned before, moving towards more vibrant and just society, and we exist at this intersection of where money and mission meet together, and we're trying to really improve that flow of funding into organizations. So just as a review of where we're coming from and what Nonprofit Finance Fund has been doing, and this training is a part of that work of providing accessible insights. If you can believe it, we are already halfway through the 12-part series. This is 6 in a 12-part series, and I'm happy to preview for you who is going to be taking you through the next half of this. Next up, we have Annie Chang, followed by Alice Antonelli, Ashley Franks, and then Jonathan Lambor. So you're going to see some new faces, and they're going to walk you through the next bit of content for you in the next half. So thank you so much for joining us through the first half, and we're excited to be working with you through the second half as well. I know that we have spent a lot of time together learning about, some really foundational financial information. You've, learned about the context within which we operate. You've been looking at, some pretty crucial financial documents like your income statement or your statement of activities, as well as your balance sheet. And you've spent time unpacking, what it is that you can glean from that and understand, and then also some budgeting best practices. Now we're going to dive into a bit more of a tactical tool that deals specifically with cash. And my hope is that, throughout this presentation, you walk away with these key learning goals. So hopefully you'll be able to create a cash flow projection tool and understand common strategies for managing cash flow. You can recognize some common missteps and how to avoid them, and then understand the differences between cash and accrual accounting and how cash flow management connects to accessing credit, which is one of the options that you can see when you identify if there might be a cash flow issue. So I know you've seen this image a lot, and what we like to share is that this cash flow tool, it's very specific, but it really does exist in the context of your overall financial health. You've spent a lot of time specifically in the last training looking at, that blue piece, the balance sheet. I know previously you've also talked about the business model and how they interrelate. And this particular tool of cash flow, it really helps you zero in on specifically that orange piece, but then also some longer term pieces of your financial health. Do you have enough cash coming in to cover your operating expenses or your regular expenses? Hopefully this cash flow projection tool helps you get some insight into that, which can then lead to, strategic planning and decisions that you need to make that can really benefit your overall financial health. And before we delve really into the specifics of this, I also want to set the stage for us to see that, this cash flow planning tool also exists within the context of capitalization. And so just remembering that, nonprofit capitalization, do you have the appropriate resources, the resources that you need to deliver on your mission? And really, if you see here at the foundation of, successful or sufficient capitalization is liquidity, meaning is your cash accessible? Is it accessible to you? And can you use it to cover your day-to-day expenses sufficiently? Oftentimes when organizations have lower liquidity, they have a lot of undue stress in trying to meet their regular expenses. And I'm pretty sure we have all, now, especially in this global crisis and pandemic, we have seen, liquidity was really crucial in being able to make some pretty split decisions or some strategic decisions to, sustain through this crisis. When you have higher liquidity and you're able to cover and meet those expenses, then you can move into this space of adaptability, understanding where can I apply those resources and what can I do to make sure that we're then moving to this other piece of durability. And I'm sharing all of this with you because when we're looking at that cash flow tool, it's really helping you understand your liquidity, projecting out and also, in moment to moment. Okay, I've laid a lot of groundwork, I've provided a lot of context, and so now we're going to move into our first poll. So just to get a sense of this, and it's okay, whatever your answer is, do you use a cash flow planning tool at your organization? The answers are yes, no, I'm not sure, maybe. And just to get a sense of, where we're all coming from here. And it's totally okay because I will share with you my experience of cash flow planning in a moment. All right, seeing a lot of answers coming in. We're going to give it about 15 more seconds. All right. And I think we've reached critical mass, so we can close the poll. And yeah, so it looks like, majority of us have not used a cash flow planning tool at our organization. And that is okay. I'm actually very excited about that because, together we're gonna learn a lot. In my role, this was also very new to me. So when I was a director of volunteer program. So I'm really excited to walk you through this, and hopefully it's gonna help with, better understanding those day-to-day cash flow needs. So we're going to move forward. We may have touched on this before, and so this is just a review. You might have heard it mentioned before, cash flow projection. So what exactly is that cash flow projection tool? Well, it's a tool that provides visibility into the timing of your cash. So it creates a visual landscape so that you can better see cash flowing in and cash flowing out. It helps you understand whether or not you're able to meet your basic operating needs on a regular basis, and also help identify any moments where you might actually be running into some cash flow issues. It can really give you insight into whether or not you're having that cash flow issue in a specific time frame, or even if you're having a cash issue, which are two separate things. So a cash flow issue means you have money coming. It is coming to you. Maybe you've got a grant that you secured, but the money hasn't arrived yet. It's going to be dispersed at a specific point. A cash issue is maybe you've experienced a loss of funding. And so what that means is you actually have a cash shortage. So you're not going to be able to meet those specific needs, and you don't really know when that might be alleviated. Whereas with the cash flow issue, I know this will be alleviated because I'm going to be receiving that particular grant disbursement at a specific time. A cash flow projection tool can give you visibility into monthly increments. It can break down into weekly, daily. It can get really granular if you need it to be, but it can also be at that more monthly level to give you a prospect out into, each month of the year. Excuse me. Something that I also want to make really clear, because we've spent a lot of time talking about budgets and how budgets are also a really helpful planning tool. It's just really important to know that a cash flow projection is different from a budget. It can be informed by the budget, but it is separate and distinct. So the budget, that's an overall picture of, the entire year of your revenue and expenses. Whereas a cash flow projection tool, that's a separate document, and it really helps you zero in on the timing of that cash coming in and going out. So for instance, someone could have a budget for the year that helps them budget to a surplus. But if they were to parse through the different months with the cash flow projection tool, they would see that there are certain months where they might not have enough cash coming in at that specific time or in those months to cover their expenses and their needs. Something to also keep in mind, and we're going to delve into this in just a moment, but if your organization uses the cash basis of accounting, then your budget's going to show you the total cash in and the total cash out for the entire fiscal year. But again, it's not going to really capture those monthly ebbs and flows that you're going to experience if you were to look at the cash flow projection tool. So I know that I mentioned cash accounting, and you might be wondering, like, what does that mean for my organization? Am I cash? Am I accrual? And so we're going to walk through these two main types of approaches to accounting. So the first that I mentioned is cash accounting, and it's really similar to balancing your checkbook. So you record cash coming in and cash going out when the cash exchanges hands. So if someone writes you a check for a donation, it's recorded as revenue coming in. And if you are to pay a bill, that's recorded as cash going out. It's pretty common for smaller organizations or very straightforward organizations, this cash-based accounting. The other type of accounting that I want to explain is accrual accounting, and that's a much more comprehensive approach to accounting. It doesn't just capture cash coming in and cash coming out when it exchanges hands, but it also measures revenue earned and expenses when they are incurred. So what do I mean by that? Well, if someone makes a donation that's a pledge, so they haven't cut the check yet, but they're pledging to give you a certain amount of money, in accrual accounting, that would be recorded as revenue earned. And then if you also have an expense incurred, as for instance, if you have like a printing job and you're going to be paying at a later date for that printing job, then that's an expense that's recorded in accrual accounting. Cash hasn't exchanged hands necessarily, but it is recorded in accrual accounting. And so we share this because we want to really sort of further drill into the point that revenue and expenses, which are captured in the budget, may not necessarily equal cash in hand. So hopefully understanding these two different approaches to accounting can help you see, that this is a fine-tuned distinction that kind of informs the cash flow projection tool that we're going to be using. All right. So this is another recap. This is a very basic cash flow projection tool, and I want to walk you through some of the basic parts of it so that we can see how this works. So at the top, you're going to see that we always have the beginning cash balance. And then underneath the beginning cash balance, you're going to have your cash receipts, or the cash that's coming in and the different types of revenue sources. These are predictions of the cash that you think will come in for this particular month. And you see that they have it broken down by month in the columns over here. We have January, and then we also have February. You're also then going to see the total revenue that's coming in, or the total cash receipts, rather. And then you're also going to see the cash spent. So again, these are the expenses that you predict will happen and cash will go out. And then you have the total here. So you can see that they're anticipating they will receive cash in hand for the admission and ticket sales, the foundation grant totaling $150,000. So these numbers are all in thousands. And then cash spent, they're anticipating they will definitely be paying payroll $40,000, rent $90,000, for a total cash spent of $130,000. And then what you'll see is that this cash flow projection tool has the total cash received minus the total cash spent, and then you will land here with the net cash. So that's $150,000 minus $130,000, landing at $20,000. What you then will see is that they've added this net cash in or out, or in which case they need $20,000 to their beginning cash balance for a total of $140,000. Then what you're going to do is you're going to take this $140,000 and move it up to the beginning cash balance here. So you can see that this is the new beginning cash balance for the month of February. So I just want to pause here because this is the cash flow projection tool in its simplest form. And what I hope we can keep returning to is that the tool itself, the principle is simple, but we can add more detail to it that can, add more data to it. And right now, I'm wondering if you can see here, we have our second poll, which we're gonna share now. What might be missing from this cash flow projection tool? If you're remembering, the trainings from before, is it restricted funding like grants for specific programs or purposes? Is it non-operating funding like cash for a capital campaign? Or is it both? So let's just see now, what do you think might be missing from this particular? And I see some answers coming in now. That's great. This is good. We'll give it just a few more, give it another like 20 seconds. Look at that spreadsheet and see what might be missing. All right. I think that we just last few seconds have reached critical mass here. We can stop the poll. And majority of us answered both, which is correct. It's both. And for those of you who answered restricted funding and non-operating funding, I think you're right too, because obviously all of that is missing from this particular tool. So we're gonna stop sharing the results now, and we're gonna move into looking at how we can layer in that particular level of detail, like restricted funding and accounting for capital campaigns. But before we move on, I just want to see from Michael, are there any questions in the chat? Any things that we can answer before we move into the more detailed piece?
Sure, there's just one, I think it's more of a comment really, but this person uses QuickBooks and the cash basis reports to capture non-cash items like journal entries and depreciation that make those reports less reliable. We end up trying to analyze cash flow with our accrual budgeting along with a nuanced cash available at a given point. They're just trying to project that out numerous years, and that feels daunting.
Yes, yeah, absolutely. I thank you so much, Michael. I can totally understand how you're moving away from the cash system and utilizing the tools at your disposal and moving more into an accrual basis. And absolutely, that transition in and of itself can be challenging. And then when you're trying to see out forward into the future, that can be really challenging, especially if you are using a tool that might not be addressing your needs. And QuickBooks is really great at helping you understand, your regular expenses and revenue coming in. Hopefully this added layer of cash flow projection, when we break it down, that can really help, I hope, make it seem a little less daunting. Although I said that, and now I'm going to move into more detail, but stay with me, we can do this. All right, thank you so much. We are now going to move into looking at how we would separate that unrestricted and that restricted cash. So if you see here, we're still starting with that beginning cash balance. So you see in January, we still have $120,000 at the top. Now we've separated out the cash without restrictions and the cash with restrictions. So you'll see here that we have the cash without restrictions is actually 100,000. And then they've specified the cash that's coming in that doesn't have restrictions that they're anticipating. And then you'll see here that we use this new term, net assets released from restrictions. And all that means is that there were restrictions on cash previously, and now it's available for your use. So for instance, maybe you had a grant that was being dispersed over the course of several years, and this year it's up and available for your use. So they have a total cash receipts without restrictions, again, of $120,000. They have their expenses, their operating expenses listed here. So those regular recurring expenses to deliver on mission, and that's $130,000. And again, it's the same principle. we're going to add 100, we're going to subtract 130,000 from 120,000. So 120,000 minus 130,000, we're going to have a deficit of $10,000, that negative $10,000. And now you can see here that we've also separated out cash with restrictions. So we have cash received with restrictions, that's the $40,000, and then reflected here is that money that was released from restrictions, that cash released. So that's a minus $10,000. And you'll see that the net here is 30,000. And I also want to point your attention to, and I'm going to move this cursor so I can better access it for you, is that what we've done here up top is we've also made sure to say, okay, we had a total of a net cash of negative $10,000. That's without restrictions. We're going to subtract that, or add that rather, which ends up being subtraction, from the beginning cash balance, which leaves us as 100 minus this $10,000 deficit. That leaves us with an ending cash balance without restrictions of $90,000. When we're looking at the cash with restrictions, we're going to say, okay, we had the cash received with restrictions, then we subtracted out the cash that was released from restrictions, and we have a net of $30,000. And this is where it might get a little confusing, so please stay with me. I'm happy to walk you through it. What you're going to then do to understand what your total net cash is, so both your net cash without restrictions and your net cash with restrictions, is you're going to add together this here, the negative 10,000, with your net cash without restrictions, and this 30,000 here, which is your net cash with restrictions. So we're looking at these two gray bars, net cash without restrictions, net cash with restrictions. And negative 10 plus 30, or 30 minus 10, that will give you $20,000. So that's your total net cash. So then what you're going to do is you are going to add that total net cash to your total beginning balance up top, and that gives you $140,000, which then becomes a new beginning cash balance. But what's interesting to note is that we're still also capturing the beginning cash balance without restrictions. So if you remember over here, we had negative 10, and we subtracted that from 100,000. So it's without restrictions beginning cash minus the net, which gave us an ending cash balance without restrictions of $90,000. That $90,000 moves over here to the beginning cash balance without restrictions. So while they went from a total cash balance of $120,000 to $140,000, their beginning cash balance without restrictions, for instance, money that's specified for a particular program or money that is specified for a particular time frame, you're going to want to capture that by breaking out those restrictions. All right. So I'm going to show you here how that works out. You can see that that total ending cash balance is moved up to the beginning, and you can see that that ending cash balance without restrictions is moved up here as well. All right. So now we're going to actually add another layer to this. In addition to capturing restrictions and separating them out from unrestricted cash, we're going to look at operating cash. And just as a refresher, when we're talking about operating cash versus non-operating cash, when we're talking about operating cash, we're talking about the cash that comes in that's regular, recurring, reliable, that is spent on expenses that are regular, recurring, reliable. When we're talking about non-operating cash, that's a one-time cash infusion or a one-time major expense that may not be happening on a regular basis. So for instance, a capital campaign. You'll see here that we still, again, we have that beginning cash balance, and we still have broken out the beginning operating cash without restrictions, because we think that it's really important for you to understand not only what cash doesn't have restrictions, so it's readily available to you to use at your discretion, but also cash that isn't, specified for a non-operating expense. So again, we're starting here with a beginning cash balance of $120,000. And you can see that the beginning operating cash, so this is for your operating regular recurring expenses without those restrictions, is $100,000. We have the anticipated cash here again, totaling $70,000. And then these are operating cash, cash that's coming in. And then we have the operating cash spent. So again, the regular recurring expenses, and that's totaling in $90,000. So then we're going to take $90,000, subtract it from $70,000. So we're taking our expenses and subtracting them from our revenue or cash coming in. And then you have your total, your net operating cash without restrictions, which is negative $20,000. So your ending operating cash balance is going to be adding that negative $20,000 to your beginning operating cash balance without restrictions, which was $100,000. So $100,000 minus $20,000, and you're going to land at $80,000 total ending operating cash balance without restrictions. Here you're going to see that we condensed the net cash with restrictions just for the sake of space, but you'll see that their net cash with restrictions was $30,000. And now you're going to see that they have put below the line their non-operating cash. And what do I mean by that? So you always want to put your non-operating expenses below the line because it's not necessarily happening on a regular and recurring basis. So you want to capture above the line what is really happening on a regular recurring basis with your cash coming in and your expenses, and then account for one-time cash expenditures at the bottom or below the line. So here we have the non-operating capital grant that they've received, the project expenditures that they anticipate, and you're gonna see here that their non-operating cash net is $10,000. So in order for us to understand our total net cash, what we're gonna do is we're gonna add those nets together again. So we're gonna look at the net operating cash without restrictions. We'll see that that's the negative 20,000 here. We're gonna add it to the 30,000 here, which is the net cash with restrictions. And we're gonna get 10,000. And then we'll add it to the net non-operating cash, which is the 10,000 that we had left over from subtracting the capital project expenses from the grant. And we end with a total net cash of $20,000. So this total net cash, again, it's net operating cash without restrictions, added to net cash with restrictions, added to net non-operating cash. And that will give you a total net cash of $20,000. Again, that gets added to your beginning cash balance, which the total up here was $120,000. Add in the $20,000, you get an ending cash balance of $140,000. And this ending cash balance goes right back up here at the top. And you'll see again that we've captured the beginning operating cash balance without restrictions, which if we look here again, that was that 20,000 here, subtracted from the 100,000, which gave us an ending operating cash balance without restrictions of $80,000, which moves up here. So you'll see that reflected here. All right. And that ending cash balance here of $140,000. Do I have any questions? Because I know we just walked through a lot of spreadsheets.
I don't see any yet, but if you do have questions, feel free to put it in the Q&A. We might just be absorbing everything that you just mentioned.
Yes, thank you. All right, well, feel free to ask questions along as we go. The important thing to remember as we move into something with even more detail, but don't panic, is that you always want to capture your beginning cash balance at the top. You want to make sure that you're specifying your restrictions and your without restrictions, and you're including below the line your non-operating expenses. So those not regular, very extraordinary, one-time cash inflow and expenses. All right. So if you're thinking, this is a lot to absorb, I'd like to go back into it, I'd like to practice, that's really wonderful. We have here a sample cash flow tool with step-by-step instructions. It's available at our website. We have a lot of other really great COVID-19 response tools and resources for you all. So if you want, you can always access this through the link provided here. It'll walk you through step-by-step using this tool and can walk you through again how you can set this up for yourself utilizing all the concepts that we just talked about today. I know I just said that was a lot of detail, and here's even more detail. And I show you this because this is an organization that has decided they want to project out the 12 months that they are anticipating cash coming in, cash going out. They want to look at the entire fiscal year. So they've done a few things here. They have separated out their operating cash balance without restrictions at the top, just like we've seen. They also have not had any capital expenses, so you don't see that listed here, any capital cash or capital campaigns. And what I want to show you here is that, they have the beginning cash balance at the top again, and they have the ending cash balance at the bottom here. And if you notice, it's all in the black, their ending cash balance. They're always ending with more cash. But if we look in at their operating cash, so that's that operating cash they're using to meet their regular recurring expenses, and without restrictions, so it's accessible to them, it doesn't have any restrictions. We really zoom in, we'll see that they're anticipating in April, May, and June, they might not be able to meet their expenses. They might not have enough cash at their disposal to meet their regular recurring needs. So this is where, prospecting out for those 12 months is really helpful for you as an organization, because you can say, okay, we're looking out ahead and we are now spotting a potential cash flow issue, meaning there might be an issue with the timing of the cash flow that you're receiving and your ability to address your regular recurring needs. And you can see that it changes out here so that it's no longer negative. So that gives you insight into the fact that this is a timing issue. Really, it's really only happening for this slice of time. It's not a cash issue where they're having a shortfall, it's a cash timing issue. So what are some strategies if you're having that timing issue? If you've done the projecting out and you spot that there's this time where you might not have enough cash to cover your needs? Well, there are a few different options, and we're going to dive more into the borrowing cash specifically. But the first is you can access existing cash. So you can access internal cash reserves if you've built those up for surpluses, or you can approach funders to ease restrictions on existing revenue. I know at my previous organization, especially when COVID hit, we had a very specific restricted grant that went to funding a particular program. And when we were engaged in conversations with that particular funder, they said, you know what, we understand this is extraordinary circumstances, so we're lifting all of those restrictions and all of our funding to you that we were promised for the year. That can be used for general operating support. So that was another way for us to access funding to cover our expenses. The next option is to not spend cash. So that means you can contact your vendors, you can talk to your lenders, and you can ask if there's a way to have a more favorable payment plan. And you can also minimize expenses. I know many of us, when we pivoted to meet this extraordinary moment, we had to adjust our programs. We might have been able to minimize certain expenses. So that's another option that's available to you. Another option is to receive cash. And to be really specific about this particular point, it doesn't mean go out and start a whole new giving campaign and put a lot of energy into creating another campaign to bring in cash. What we mean by this more so is talk to funders about potentially advancing or accelerating the payments that were already coming your way. You could look at if you can move up a regular annual appeal, can you change the timing of that? Another option too is, can you convert funds? Maybe you had people who subscribe to a season of shows, and rather than keep their subscription, they can convert that to a donation. And the last option that we're going to dive a little bit more into is borrowing cash. So this is when you would draw an external line of credit or access a bridge loan if appropriate. And that's what we're going to talk a little bit more about today. So when we're talking about accessing debt to address cash flow issues, a lot of times there can be a lot of concern or nervousness around debt, but actually if it's a cash flow or a timing issue, debt can actually be a really smart, strategic, temporary response. There are two different types that we'll talk a little bit more about today. There's accessing a line of credit, and really accessing a line of credit can help address that periodic or recurring cash flow issue. It can also help with the timing of those disbursements. So, if it's more like you're just waiting on the timing of particular cash, then it can help with that. Something to consider is monthly interest is paid on outstanding balances, and there is a non-use fee if the line of credit is not being actively used. But the benefit is also you're building up credit and you're building up that relationship with the bank. The other option is a bridge loan. And so that's a bridge loan because it bridges that gap that you're experiencing while you're waiting for funding from a very specific source. So that could be if you have a government contract and you're waiting for the government funding to come through, or a particular funder is delayed and that's coming through and you're waiting for that. So if you have a bridge loan, it covers expenses until the source of the funds is received. And oftentimes the principal repayment is required once you receive those funds that you were expecting. Monthly interest payments are required, and that's generally from your organization's operating cash flow. So that's another thing to take into consideration when you're addressing this cash flow issue and also projecting out, incorporating this decision that you might make to take out a bridge loan. Another thing you want to take note of is what opportunities debt presents to you if you're looking into taking on a line of credit or a bridge loan to address your cash flow issue. So there are some opportunities like you're really going to have greater access to cash than you would through straight philanthropy alone. It's faster, it's more flexible, and oftentimes nonprofits can access better rates, especially if they're going through a government or a mission-based entity. Things to consider as you're taking this on is, are you going to be successfully able to complete a loan? Do you have the capacity to work through that loan application? Is there someone who has that role or that capacity to fulfill? Taking on a loan means you're also going to have to manage those loan payments. So, is there someone with the capacity to, stay on top of that and be mindful of that and make those loan payments on time? You also want to think through, for smaller organization, the difficulty of securing a loan without collateral that oftentimes can serve as a barrier and is something to think through if you don't have sufficient collateral. And of course, as I mentioned before, sometimes there's a kind of a stigma around debt or a lot of confusion. And so there might also be some internal resistance that you're going to want to talk through and consider if this is a viable option for you. I want to pause here because we've covered a lot of ground and just acknowledge, I think we're okay in the chat. So we'll move forward, but putting together that cash flow document, working through, thinking through what is the actual timing of our cash coming in and what is the timing of our cash going out, it really creates a really strong set of data for you to identify different kinds of scenarios that might be happening at your organization. So you may be able to highlight those moments where you might run into cash flow issues, cash timing issues. What that also does is it sets the stage for you to really have strategic, clear, data-driven conversations internally to see how you might address those issues that you've identified. A cash flow projection tool can serve as a foundation to identify questions like, what really are our greatest cash flow challenges? You can think through how might cash inflows be affected by the current economy, especially in this context of the pandemic. It's constantly changing. There's a lot of unexpected twists and turns. You can also think through, what activities do we have here that are core to our mission? And how do those activities impact cash flow? Because you can zero in on those expenses. You can look at, who are our vendors that we're partnered with? Can any of that payment be delayed? If so, for how long? And you can also think through, what are my non-negotiable cash needs? I know that when my organization was navigating through COVID, we really thought through, yes, there are expenses that we may need to cut, but what is our number one goal? And for us, it was retaining staff and taking care of staff. So that's your non-negotiable cash need or your non-negotiable expense. Another question that you consider is, how will operating changes affect reserves and the ability to manage cash flow? So if you're looking at your anticipated cash coming in and your anticipated cash flowing out, you're thinking through, how might these expenses change, especially if we're considering a lot of different approaches to our programming. Some of you may be considering a sort of hybrid model Maybe you're going back to in-person in some capacity. And in that way, you might be incurring new expenses. You might be encountering new challenges. And so having this cash flow projection tool means you're actually putting some thought behind what might those expenses be? What might the timing of our cash inflow be? And will we run into any challenges that we might not have expected? You're really clarifying and adding some certainty to what might happen in the future to your organization with that cash flow projection tool. And so in that way, you are really laying the groundwork to have some really, fruitful conversations about strategic decisions. You can engage your staff, your board, your funders in these data-driven conversations. You can really think through the implications of your funding, what your, reliable existing funding, any new reliable funding sources that are and you can also think about like, what does this mean if we're lifting any social distancing restrictions, if we're exploring those hybrid models, what does this mean for us? You can also play through these different scenarios. So you can use the cash flow projection tool to think through what are these different scenarios that we might encounter, and can we make that lift? Can we take on those scenarios? And when you're also exploring these scenarios together, you're also identifying, if we have XYZ happen, then we can pursue one particular plan. But then if this other set of issues happen with our cash inflow, we can pursue this other type of plan. So you can really think through, what are the different scenarios? And then what are our different plans for these different scenarios? And together, how will we identify when we will activate those different scenarios? And this can all be rooted, again, in that data, in those projections that you develop that are really rooted and informed by previous experiences and budgets that are put into that projection tool. So that's what we've arrived at the end of talking through the content about the different strategies that you can do to manage cash flow, how to set up and use that cash flow projection tool. Hopefully you've been able to recognize the common missteps and how to avoid them, like not accounting for, the restrictions or not separating out operating cash. We hope that we've also been able to illuminate more the differences between cash and accrual accounting, and how cash flow management connects to accessing credit as a viable option for you. We've also sort of touched on how, you can use that cash flow projection tool to really think through different types of scenarios, different types of plans that you might want to develop to address those scenarios. We always like to move towards checking out with the head, the heart, and the feet. This is something you might be more familiar with now at this point, but really thinking through, what's one thing that you learned from today's session, or you can go with the heart. How did today's session make you feel? And then your feet, what kind of actions are you going to take? Maybe you're going to set up a projection tool for your organization too to look into this. So if you want to, just give a moment to think through, the head, the heart, the feet, what's the one lesson, how you felt, or one action you might take. And we invite you to drop that into the chat if you feel so inclined, or you can sort of reflect on that and think through it. And go ahead and drop in and move into talking through, as I mentioned before, this is one part in a 12-part series. We've reached the midpoint. We have 6 more sessions after this. You can see that the next one is coming up next week on May 18th. And, we are going to be pushing in through July. The next one specifically is strategic budgeting and scenario planning. So this is really going to build off of, once you lay the groundwork and work through that cash flow planning tool and think through all the different possible scenarios you might encounter, what do you do with that information? And how do you create those more specific plans of action? That's going to be led by my colleague, Annie Chang. That's going to be on May 18th, 1 p.m. Eastern Standard Time. So really walking you through how do you take the data that you have cultivated and developed and think through those scenarios and plan around those. And you can register, I believe, in the link that's dropped in the chat. And now, are there any questions, thoughts?
Great. Well, as we wrap up today, if you do have any final questions, please put them in the Q&A. I just wanted to make sure that everyone saw my comment in the chat about the cash flow template. This is a phenomenal resource that Nonprofit Finance Fund gives to the field for free. You can go on that link, you can download that. It's a wonderful Excel file. And I know during the height of the pandemic last April, May, when cash flows were really under the microscope, doing week to week, day to day cash flows, not just month to month, was really important. So some folks took this and actually went down to the micro level to know what cash do I have in today or next week. So it's one of those ways that we kind of manage during a crisis, is to know our day to day cash flows. And so you feel free to access that. And also NFF has so many different resources. Thank you, Marisa, for putting us all of this out here for us, that anybody can grab additional webinars and content for anything that you might need. My colleague Sarah just put the link to that next session. So if you're wanting to take it to the next level, feel free to register and share that as much as you can. And if you're interested in the entire webinar series that we have, obviously this is a financial management section of it, but we've got a lot of stuff on advocacy and general management and leadership, fundraising in times of COVID, including online fundraisers and online galas. How do you do a capital campaign while you're also trying to have your annual fund under fundraising is a big one. So anything you want to register there is available to anybody. So feel free to check that out. This Thursday, actually, we're having a webinar with Penn Creative out of New York City, talking about those of you who are managers or leaders out there. How do you motivate your teams remotely? It's been very hard for all of us who do have the luxury to work from home, to remain connected and motivated to really be performing at the high level. So as a leader, how do you motivate your teams to be able to do that? So we have a lot of tips and tricks for that as well. I don't see any questions, so I think that was very clear and concise, Marisa. Thank you so much for your expertise today, and thank you all of you for attending our webinar. And we'll see you at the next Mass Cultural session. Have a great day. Bye bye.
Thank you.